welcome everyone. My name is Adrian Sanders. I am the CEO and co-founder of Chargehound. I am here today with my friend, mentor, and investor, Reid Hoffman, partner at Greylock, PayPal Mafia, founder of LinkedIn, board member of, I don't know, go look him up on LinkedIn. You can see everything. Also host and founder of Masters of Scale, an incredible resource for entrepreneurs, author of Blitzscaling. I could go on and on. I think you all know. And I'm super excited to talk today about the fintech fire, what's been going on in payments, crypto, and what the world looks like, pandemic moving forward. So welcome, Reid. Really excited to have you here.
Awesome to be here. And, you know, it's as an investor coming along on the journey with Chargehound has been massive and fun.
It's been super fun. So let's get right into tech and payments and how that's going. I think one of the ways, and Reid and I have talked about this before, but I think what's really exciting to ask you some of these questions is around the high level trends, the sort of curvature of the earth, sort of insights. And so I think that's where most of the focus of my questions is going to be. And so tell me a little bit about in 2020, you know, specifically sort of around e-commerce and the buyer behavior and what we're seeing. You know, what have you sort of seen, and just sort of at that high level, how companies have reacted, and what do you think has been particularly interesting, pandemic and moving forward?
Well, I think there are probably three general thoughts. One, which I think has been said a lot, although I think the first person who said it was Satya Nadella, which is, you know, the acceleration of digital transformation, which is, I think Satya said, you know, in 2 months, we've seen 2 years of the digital transformation. And I think that has essentially continued apace because the things that were already, you know, kind of naturally part of the future were kind of accelerating. And obviously, most of the time, people think about that in the kind of the positive context. You know, the use of video conferencing, the use of, you know, being able to buy lots of stuff online, building up the infrastructure for, you know, delivery of either digital things or physical things, you know, as a way of doing it. I think some of it, you know, relevant to Chargehound is kind of the second point, is just like any acceleration, when you start something, it becomes a microcosm of all society as it grows. And so you not only get all the good things, which is, you know, the, you know, they kind of suddenly like, oh, look, I can't buy toilet paper online and have it delivered to me, and, you know, don't have to go down, you know, I can avoid going down to the local store in the pandemic in order to do this stuff, including like everything from meat and vegetables and all the rest of the stuff. And I can even do the farmer's market and have farmer's market delivery and so forth because of the general infrastructure for all this stuff, if you happen to live in the right area for a farmer's market. But also, of course, the fraud. Like one of the things that I thought was, you know, kind of like a personal interesting thing was watching, the reason I started with the toilet paper example was like various clearly fraudulent Chinese or other actors putting on buy toilet paper from us.
Yeah.
Right. Yeah. As kind of the, you know, kind of trying to cash in on the toilet paper and never shipping it, like putting in false shipping response, you know, receipts and all the rest, like hacking all of the kind of fraud side of it for doing this. And, you know, and that kind of acceleration too, because like, what does the entire thing mean for trust and so forth?
Yeah.
And then the last and the third of it, I think, is the realization that some things that you didn't think previously were better on, you know, kind of like digitally and remote and online are. Not all parts of education. There's a whole bunch of kids socialization, everything else that's much better in school, attention, etc. You know, being there with your classmates. But some parts, like the fact that you could actually, in fact, take a whole bunch of different classes and the best teachers could be, you know, distributed across time zones and everything else, and make that happen. But also like telemedicine and other kinds of things. And then what the relationship across there, what the relationship of economic relationships are there, you know, all the rest of that stuff, I think is all things that 2020 has done that will be persistent. That isn't just like, oh, now back to the, you know,
sort of Pandora's box,
back to usual, you know.
Yeah, sort of Pandora's box, as it were. Yeah, I mean, I think one of the points you noted there that I think is really fascinating is scale, as I know one of your favorite topics. But I think what is fascinating is, right, well, these issues around bad behavior or good behavior, right? What these sort of processes are in the non-scaled world, maybe they're not interesting, but now all of a sudden when you put 100 million people into that flow, well, actually there's really interesting things going on there. So I think fraud is a great example of, well, you would never defraud like a shipping company if there's only X amount of volume, but what if there's 10,000 X volume, right? So that's a super interesting point. And obviously at Chargehound, we've noticed that as well.
Yeah,
so
exactly.
One thing I think is pretty interesting that I wanted to ask you is, do you see any parallels in the explosion of the adoption of digital payments in 2020 to other eras or sectors that took off with a rapid clip, with, like maybe QR codes right now or contactless?
Well, I think part of what happens in the takeoff of payments is when there is a very, very big jump. And so it's one of the reasons why, like in China and other areas, there have been more payments advances than in the US, because in the US, you said, well, we have this robust credit card network and everything else, which works pretty well. And so therefore, even though it's a little bit more expensive than anything else, we were slower on like mobile payments and other kinds of things. Now, I actually take this a little bit as the kind of the Steve Jobs point, which is, nothing is so broken that a really great product can't do it. Because, like, for example, I don't know how many people remember, like, Silicon Valley in the US was essentially way behind on mobile phones until the invention of the iPhone. And then all of a sudden the smartphone revolution, is based in Silicon Valley.
From Nokia to iPhone kind of thing. Yeah.
Exactly. Yeah. Right. Because I remember going to Japan in 1996 and feeling like I was a farmer who'd come in on my cart with my donkey, relative to the like mobile
buying stuff at 7-Eleven with their phones or whatever.
Yeah, exactly. Where they had all of this amazing stuff going on with phones, and I was like, oh, I kind of thought the Motorola flip phone was cool.
Right. Yeah. Your Razor.
Yes, exactly. Yeah. And then obviously like an explosion of a new ecosystem. And so I think that kind of thing is the kind of thing that generally happens in payments. So obviously one of the reasons why PayPal had taken off is because there was this huge transaction volume on eBay that was this all broken version of checks, and all of a sudden that peer-to-peer network could be really, really useful. And so that takes it off. And I think those are the kind of the cycles. And that was like the takeoff, like it was a rocket ship on eBay, and then broadened out, because once you have a network, all of a sudden the adoption of that network is a kind of more useful thing. And I think, we're still at the very early stages of mobile. I think one of the things that's probably been, most interesting to me personally, and especially given the pandemic, is the cross-border, right? Because, part of what happens is all of a sudden the border matters, geography matters a lot when you're going down to your local Starbucks, or you're going down to your local, grocery store or whatever. But all of a sudden when you're ordering online, look, there's some shipping and there's some delivery and there's some customs and other stuff.
But effectively,
like, look, what's the thing I want? And then all of a sudden, cross-border really matters. By the way, you want the cross-border. I'd say the other thing in kind of general commerce is like everyone was like, oh, Amazon or Walmart are going to own everything. Well, you see the rise of Shopify, and you see like a lot of like, okay, in fact, there's a whole network ecosystem trying to do innovation of small merchants and large merchants and everything else. And that actually, in fact, I think opens up a lot as well.
I think that's also like a point, right, that Paul Graham used to always bring up, is like how big you think the pie is based on the sort of front runners in the current industry. And then a new, like Airbnb is a great example of this, is like, oh, the hoteling industry is X size. And then Airbnb comes on. It's like, no, the booking industry is orders of magnitude higher. And I think Shopify is a great example of that. I think also something that you mentioned about cross-border that I think is super fascinating is this idea of go-to-market for e-commerce companies, and your go-to-market strategy in 2019. You might as well just put that in the trash can, right? Because like you said, my mom, for example, she doesn't know where this product originates from. It just shows up in her Instagram or Facebook feed, or a friend sent her a link and she's buying it. And so, now you multiply that by anyone who can buy things on the internet. And it's like, well, how do you turn on LATAM or APAC? It's like, well, it's not like a question. It's not a hypothetical question anymore, right? So we're definitely seeing that, on the buy side, or on the go-to-market. I think definitely feeling that pressure. Kind of on this topic of, you were there at the beginning of PayPal. as part of that big inflection point back then. You're seeing this one now. What is different? What does feel? We kind of talked about what the similarities are. Is there anything about the pandemic that, I mean, it's obviously different, but anything from a technology perspective or entrepreneurial perspective that you think particularly stands out?
So, one of the earlier point, which is it's just larger and larger and larger. Like the like even when we were in PayPal, it's like, okay, you could email payments everywhere, and they had the internet. It took eBay to really grow it off, but now there's this kind of just totally broad infrastructure. It's like, how does the internet essentially revolutionize everything? And people say, well, that was kind of the 1993 theme. And it's like, actually, in fact, it's still going.
Yeah.
Because when you get to, like, for example, Internet of Things, and you get to, the whole fintech revolution that's going on, it's kind of the reinvention of economics and value and money infrastructure, based on this whole thing. And so I think that part of it, with that kind of the global focus. I also think that, by the way, part of it is, call it back in the PayPal days, a lot of the primary driver of the internet and tech infrastructure was Silicon Valley. There were bits and pieces in other places, and now obviously there's a lot of innovation going on in China. Like basically every place that has strong technical education capabilities, which obviously trying to democratize, make more available online, can start doing innovation. You see interesting innovation in Europe. You see interesting innovation, in Southeast Asia and broader Asia. Like all of these areas then also create the innovation. And this is like, for example, like on a micro thing, one of the things that I was doing, paying attention to in Zynga is like the whole digital goods invention was in the Chinese and Asian ecosystem, and then spread more broadly. And it's like everyone goes, oh yeah, actually, in fact, people do care about that, because previously, and then, it gets all the way to NFTs now. People are like, well, people really pay for that kind of digital good? And the answer is yes, if it fits in with their life.
20 years ago, right?
Yeah, exactly.
So you're suggesting that a army of VCs moving to Miami might help spur on innovation globally? Is that?
I am less the thinking that Miami will be a tech hub. I mean, obviously there are smart people who are moving there, but I actually think that this is one of the reasons why I think Silicon Valley goes, is because of the density of network. People who go, look, what I want to do is work in technology, and to some degree, the culturally less interesting parts, like people, like I was having this argument with Michael Bloomberg, like, New York is this great city. It's like, yeah, like people move there because they love the theater and the art and the museums and all the rest of the stuff. People move to Silicon Valley because they want to work in the tech industry. Yeah. Well, Miami seems to be more of a party town, right? So it's like people move there because they want to be part of the party town. That's not how you build the great technology companies of the future. And so I actually still think that the density and the drive of Silicon Valley, still is pretty central in this stuff. So now right. I'm hoping after the pandemic that we see more interesting, Austin and Boulder and other places that go, what we're doing here is working really, really intensely on creating the technology that makes a better future, and not like, because entrepreneurship is anti-balanced life, anti-party life, anti, et cetera, because that's the, what am I doing on Saturday afternoon and Saturday evening? I'm working on building the technology that will define the future. Yeah.
Well, we'll see. Well, the bets have been made, so we'll refer back to Miami in a few years. I want to get into crypto. You're obviously one of the biggest proponents, one of the earliest people to identify that crypto was going to be special. It's been a special year for crypto, or a couple of years. Can you talk to me a bit about I think what's interesting is the 2018 dip to now. What are your thoughts on this sort of generally?
So I wrote an article in Wired UK 2015 about how calling it, actually it's with cryptocurrency, crypto capital, because I was playing on CAP, currency asset platform, because I think it's the reinvention of the platform that is ultimately most interesting. Not to say that even just the pure asset breadth of, like, it was obvious to me once, kind of Wences Cazares explained it to me, that it was going to be at minimum digital good and digital gold 2.0, and that was going to be part of portfolio management and was going to enable certain kinds of things about cross-border payments and other kinds of things, and that was a minimum. And then, of course, once you get there, eventually you get to smart contracts and you get to other kinds of things that enable a kind of a new technological, a network as a platform for the future. And so I gave that talk at Davos. The then editor of Wired UK asked me to write it. It's still true. It's a brief call to arms manifesto, but not in detail. And I think the thing that is funny is that almost because of public markets and business press and everything else, everyone really wants to comment on the day or the week. It's like Bitcoin up 2%, Bitcoin down 3%. And it's like, who cares? Like almost completely irrelevant. It's the same thing like when people say, well, NASDAQ up 2%. What do you think?
Yeah.
You're like, who cares? Like the real question is, like, what are things happening in the overall economy? What are things building to in 1 year, 3 years, 5 years?
Value is being generated.
Right.
Yeah.
And so, for example, it's like, well, did you ever predict that Bitcoin would get to this current price? And the answer was, look, I actually thought it was nearly certain at some point, which year was unknown to me, that it would get to this kind of price, because that notion of to some degree, when you want a portfolio of assets, and a lot of it's being driven by the asset side, you actually want maximum diversity. Like you want to kind of say, look, I have, like, for example, it's like, well, Bitcoin, everyone's going to get rid of gold. It's like, well, not going to get rid of gold entirely. You're going to have some Bitcoin, some gold, et cetera, because a portfolio management is risk diversification across it. And so some in crypto makes sense. And so people said, well, like, for example, this year's trend, which may have been accelerated by the pandemic, just because enough disruption and change, people say, well, look, I'm going to put part of my corporate balance sheet into crypto too. It's like, look, it's just rationality, right? Which is to say, hey, look, I should diversify when I have a very large balance sheet into a set of things, because then whatever the thing is that might, like, if something goes down, other things, kind of like balance out the portfolio. That's just an obvious thing to do.
Yeah. Interesting. From a payments perspective, what are your thoughts on crypto? Dan at PayPal's buying boots online with with Bitcoin. Is that here to stay, or has it arrived on time, or is it too early?
Well, I think there are obviously cryptos, Tether, stable coins, et cetera, that are really designed for facilitating payments. One thing I think is almost a surety is that currencies have to be relatively stable in value. Currencies become very bad when either you get like this hyperinflation, or all of a sudden it's decreasing in value.
Right.
I'm like, kind of classically, like, I'm wheeling my barrel of currency down because
through the streets
right away. Right.
Yeah.
But the same thing is, by the way, if the currency is massively increasing in value, it's like, well, I don't want to, like, if I hold on to this Bitcoin or dollar or whatever else, and it's going to be worth more next week, I don't want to pay you in this. I want to pay you in something else, because this becomes an asset. I mean, there are times there's a reason it's like cross-border, or the only thing that's fungible, and like it's maybe the only, like, same time when people are trading in gold and other kinds of things, like, well, this currency doesn't work and this one is one that will transition in. But generally speaking, you want to hold assets that you think will appreciate. And so I think that's and when you get to like a Greylock investment like Coinbase, I don't think it's the payment side that has made Coinbase so amazing. I think it's actually, in fact, it's the assets and the access, and Coinbase's theory of we're going to be all crypto and everything in a safe, well-regulated place. I think a very smart bet that you're going to, I think it's this week or next week or something. You will see, because as people can look.
You're feeling good about the IPO is what you're saying.
Yeah, well, it's I think everyone kind of makes their own decisions on these things, but it's like, it shows that crypto is a real thing.
Yeah. Yeah, I think that's interesting, this point then, that effectively, if you have an asset that you're trying to use to be a transfer of value for like an exchange of goods, and that asset keeps rising meteorically or dropping precipitously, it's tough. Like, how much did Dan pay for those boots, right? Well, it depends on what week you're talking about.
Yes.
So on that point then, like, will we get to a world where crypto is, takes over, and Visa and MasterCard are cryptified, or they're replaced, or what does that world?
So I think we will have reinvention of the network basic platforms. Those network basic platforms, generally speaking, the more that you allow kind of open platforms, one of the benefits of a lot of the crypto side innovate, the more entrepreneurial innovation you get, the more progress you get when you decide. Now, you also have some fraud and some other issues, just like the internet being an open platform, a lot of great creation, but also a lot of problems. And so you have to kind of constantly shape that. Now, the one part of the crypto community, some crypto community proponents that I kind of break ranks with is, I do think that it's important to have government participation, government innovation, government kind of regulation in these things in the right kind of select ways. And so I don't think like banks going away or Visa, MasterCard going away. I think they'll be reinvented as these platforms do, and the platforms hopefully will drive a cycle of innovation that has been heretofore slow or not present. And I think that's a way of kind of looking at it. But I do think it will enable that these platforms and increasingly globally to go. Smart contracts are one of the things that I think is actually another thing that's just a question of when, not if.
Yeah.
And how they work, because I think that's a good part of how, like, rule of law is one of the things that's really important to commerce, really important to capitalism. Smart contracts and the crypto side of that is actually, in fact, part of the kind of the codification of rule of law. That will actually be extremely helpful to
titling, right?
Yes.
Like titling just goes away, thankfully.
Yes, exactly. So but I think that all of that stuff is essential. And I think what you'll see, and by the way, if some of the large companies don't make the curves in the innovation changes, then they diminish. That's part of the reason why technology creates new companies, and then some old companies make the transition and some don't.
Yep. Yeah, makes sense. Do you want to talk a bit about Zappo at all? Anything that you're excited about? One of your portfolio companies?
Yeah, well, Wences Cazares, who I refer to as Bitcoin Patient Zero for Silicon Valley.
Right.
Like my very first purchase of Bitcoin, I called my my family office manager, and I said, "Hey, I'd like to buy some Bitcoin." And it was a very funny conversation, because he said, "So have you talked to Wences recently?" I'm like, "Well, I'm looking at him right now." He's like, "Oh," and I was like, "Okay, you're a Bitcoin Patient Zero," and I was obviously very appreciative. Wences has been a great understanding theorist of money and everything else, and I think Zappo has thought a lot about, like, because part of the thing is when you're in relatively advanced forms of first world countries, which includes actually, in fact, Chinese tech ecosystem. You kind of go, oh, well, why, like that, like even Silicon Valley didn't really see crypto in the very beginning.
Yeah.
And actually, in fact, when you go to emerging world and an emerging market, everything from banking and payments and costs of the banking system and everything else. And Zappo has been one of the primary leaders here. And also, like, how do you have banking that kind of, that works in an emerging market circumstance, banking that works in a cross-market circumstance, and so that was like my very first crypto company investment was Zappo.
Right. One more question from me, and then I'll get into some questions that were submitted. I think one of the things that I wanted to ask you about is we're looking at companies like Stripe and Plaid and Robinhood. Fintech just completely bonkers right now. The market is, I think frothy is even an understatement in some ways. Well, from my perspective, are these the next big Airbnbs? Is this kind of where we're going from a tech investor perspective? Is this the new frontier in some ways?
Well, it's definitely one of them. I'd say three things in this. One is, look, as a macro thing, it continues to be the network densification of human society in our lives, in our work, in our entertainment, in education, in our health, et cetera, and financial infrastructure is part of that. And that's part of the reason why you see these amazing, new, kind of network company, fintech giants coming out, because it's kind of we need like, PayPal is like the global payments OS, that we need those kinds of companies, and then the ability to have them be platforms that you can build on top of in various ways. And, those are all just lenses and angles onto that, whether it's, kind of payments and in small business infrastructure or stocks or kind of other kinds of financial infrastructure. And I think that's one of the reasons why you see it. Now, the second thing I think is that kind of a little bit of the of kind of what you're seeing with this kind of this network infrastructure is it's also going to cause new kind of other services like identity, trust, and so forth. And I think we'll see some of those. And then the third is that you say, well, okay, well, it's just fintech, and actually, in fact, part of what we're seeing in this is like there's so many different areas where there's tech advancement. Because people say, what is the new tech area that really excites you? And I'm always interested, of course, in networks and marketplaces. It's my own history. It's what I'm a theorist and an entrepreneur and myself, an inventor and a reinventor. But then you go, well, okay, and crypto is part of that. But then you go, oh, synthetic biology, Internet of Things, autonomous vehicles, lots of stuff happening. And it's all, I think, because of the network side is a way of they're all creating networks and enabled by networks.
Right. That makes sense. Yeah. And I guess but I think that's also always been your perspective is you're like, there are many horizons, right? Yes. For tech. So I want to get to some, I know we just have a few minutes here, so I want to get to some questions that were submitted. This one is from Larry Baird, the CMO of TV4 Entertainment. How can technology solve the problem of reaching the unbanked customer at scale? So you kind of talked a little bit about this with Zappo. Anything more you want to sort of touch on there?
Look, I think there's obviously it's one of the kind of key needs because part of the way that we get increased global prosperity is if you bring more people. Now you have to worry about because as everyone goes into middle class, you get concrete and steel and all the rest, and that hits a climate change thing, but like, hey, everyone should have these kind of better lives. But the way you increase productivity is increase the ability to participate in the global commerce system. So, Greylock's made a couple bets. I bet in PayJoy, for enabling, kind of a microfinance through phone side of thing, and Opportune for being part of the unbanked communities, especially in, kind of trying to cross wealth and participation disparities in countries like the U.S. So I think those are just examples of what Greylock's done. But I think the general thing of saying, look, how do we create this platform layer that allows that participation, allows the connection to the global network? Is I think there's all kinds of things. Like I think even our mutual pal Max at Affirm, and kind of like, okay, so how do you say, well, we use credit decisioning? I mean, I think there's a lot of increase in credit decisioning and kind of,
more sophisticated ways of de-risking
exactly. And so all of this stuff I think is important. And if you can get the cost structure such that you can start onboarding, because there's a lot more people who are part of the emerging world than there are part of the first world. And how do you onboard them? You give them chances of making great economic progress. And then that also obviously unlocks very large, shared market opportunities.
Right. Yeah. All right. Last question comes from Logan Vanderlinden, who was on the show earlier, but it's a great question. He's the head of payments at Scrib. How patient should investors be with fintech startups? How soon after launch do you expect revenue profitability? That's a hilarious question for me to ask you personally, but I'll let you answer that.
Yeah. Well, in some degree, my answer, which is, part of what makes Silicon Valley a entrepreneurial hub, and part of what makes the capital useful and else is the learning that what you do is obviously you always have to pay attention to capital in startups, because if your capital dies, you die. And if you don't have a capital market that will be responsive to you, then you actually have to get to revenue, you have to get to profitability. And if your capital market requires you to get to revenue and profitability early, then you have to do that as early as well. But one of the things that I think Silicon Valley realized, and it led to some critique externally, like the first internet boom and so forth, it's like, hey, actually, in fact, when you're building these networks, you can put off revenue, you can put off profitability. Heck, you can even put off business model questions to some degree. I mean, even like Google, it's like, well, what's your business model? Like, well, we're going to sell enterprise search. Well, we're going to put a double click ad. Oh, no, we'll do AdWords.
Yeah.
Right?
Yeah.
And you can put off those decisions because it's the strategic position that matters. And as long as there's capital availability to say, look, actually, in fact, you're making a lot of progress on a strategic position we'll take the risk on revenue. We'll take the risk on profitability because that's a better trade-off of equity, value, and risk. And that's actually one of the things that a mature entrepreneurial ecosystem of mature entrepreneurs, mature talent, mature capital recognizes. Now, that doesn't mean like never care about that, because by the way, the terminal value or the mature value of these businesses, of course, has to do with revenue and operating margins and everything else. But the question is how you get there and how soon you have to be showing those proof points. And it's a little bit like you say, well, it has to be shown right away. It's like, so if you walked into a restaurant and say, well, show me your appetizer right now before I know whether I'm going to sit down at this table. It's like, no, I trust it's going to be an interesting place. So now show me the menu. Like there's a strategic buildup that's always very important. And that's actually one of the things that network of learning is one of the things that allowed Silicon Valley to then create so many companies, like all the way back to my own personal history, PayPal, for example.
Yeah. I think for me, on my sort of entrepreneur journey, the thing I've learned about investors is they're all looking for value generation, but the success of those investors historically depends on how sophisticated their understanding of value generation is. And so if you are going for VCs who just want to see revenue every quarter, I mean, they're, maybe they make some good bets, but that's a very different situation than buying into Coinbase like day one, right?
Exactly.
Cool. Well, I think that's a great place to end. I want to thank everyone for submitting the questions. And I also want to thank Reid. Thank you so much for your time and for coming on the show. Next, on May 5th on Payment Innovators at 9 a.m., I'm going to have Archie Puri, the Chief Product Officer at Galileo and previously the General Manager of Braintree, a friend of mine. Super excited to chat with her. So Reid, again, thank you so much. Really appreciate it.
Adrian, always a pleasure. Happy to be an investor in Chargehound.
Yeah, thank you so much. And thanks everyone for coming. Take care.